Welcome to Light Pillar Conversations. I'm Saurabh, and today we've picked up Specialized Investment Funds to talk about. SEBI has launched this new product in 2025. Let's see whether this product makes sense for our portfolios or not. Hi, Vivek.
Hi, Saurabh.
So, Vivek, India just got used to mutual funds. We just understood mutual funds sahi hai, and that's where a lot of investor money is flowing. Now, SEBI has launched something called Specialized Investment Funds. What are these exactly?
So, specialized investment funds are the new category of products which have been launched by SEBI. These are very interesting products, but to understand specialized investment funds, you can consider it as another scheme into mutual funds product. Having said that, these are entirely different products with two differentiating factors. The first factor is that specialized investment funds are allowed to take exposure into derivatives, and they can also do naked shorts.
Okay.
The second differentiation is that they are allowed to invest into specialized products like commodity derivatives, real estate investment trusts, and infrastructure investment trusts.
Okay, so you're saying these alternate products, which were earlier only available via, let's say, an AIF, where the ticket size was 1 crore to start with, are now available at a lower ticket size of 10 lakhs as well. So that's a good thing.
Yeah.
These products were not accessible to a lot of people now. But Vivek, who is allowed to launch and run these specialized investment funds? Are these the PMS operators? Will these be the AIFs which will launch it, or how will it work?
Specialized investment funds can be launched by the AMCs currently. Now, these AMCs needs to be at least 3 years old,
Okay.
managing more than 10,000 crores of AUM.
Okay.
The second important thing is that there needs to be no pending actions against such AMCs. And the third most interesting thing is that there needs to be a fund manager with a minimum of 10 years of work experience who had handled more than 5,000 crores of AUM earlier, and also a second fund manager with minimum of 3 years of work experience handling minimum of 500 crores of AUM.
Okay, so Vivek, now in mutual funds, we've become used to hearing categories: large cap, mid cap, small cap, sectoral. Specialized investment funds, are they of one single nature, or are there categories here as well?
There are categories in specialized investment funds also. Primarily, there are 3 categories, which has 2 further subcategories. The first is the equity long short category. The subcategory is equity long short fund and equity X top 100 fund.
Okay.
The second category are the debt funds, wherein there are 2 different subcategories. First, the debt long short fund and the sectoral debt long short fund. Then there is another third category, which is called the hybrid category. In hybrid categories, there are 2 subcategories. The first category focuses on different asset classes, that is inclusive of the investment trusts, the commodity derivatives, and the real estate investment trusts.
Okay.
The second is the subcategory which involves both equity and debt.
So I understand that specialized investment funds are introducing asset classes which are otherwise not present in mutual funds. But if I'm investing my money in mutual funds, doing the right asset allocations, doing the right rotation when the time demands, why should I really put a chunk into specialized investment funds? What is going to...
See, investment into any product, the focus of the investor is only to get the higher returns, maximization of returns, period. India has been looking how mutual funds have performed in the last 2 decades.
Yeah.
Investors have been investing into various categories: large caps, mid caps, small caps, and they have given a substantial return, a phenomenal return over the last 2 decades. Having said that, they are further trying to maximize their returns, but of course, every return comes with its own risks involved.
Okay, so just to simplify, basically, with specialized investment funds having these derivatives and alternate investments, there is a potential short at a higher return in one part of your portfolio. Of course, there's no guarantee, and it's going to come with its own risks, right? And if I have to really quantify or elaborate on the risk, what are the risks that come with investing into a product like specialized investment funds?
So, risks in specialized investment funds, there are 3 levels of risks.
Okay.
The first is specialized investment funds, as I just mentioned, that they are allowed to invest into derivatives.
Yeah. That too naked shorts.
And also the naked shorts, yes. On one hand, the regulator publishes the data that more than 90% of the people have been losing money in derivative trades over the last few years.
Yeah.
On the other hand, they have allowed investments and derivative trades go naked shorts with the investments, although up to 20 to 25% of the fund value, but it comes with its own risks.
Yeah.
The other kind of risks are that when we talk about alternative assets, in terms of investment trusts, the issue is of the liquidity. For the products like ADRs, it comes with its own currency risks. It comes with its own risks.
Yeah, repatriation risks. Yeah.
The currency risk resulting into repatriation, you're absolutely right. So combining all these risks at different levels, the probability of returns going high is of course there, but there is also a downside, which an investor needs to understand considering his own risk appetite.
Yeah, that's fair. And do specialized investment funds come with a lock-in period, given that these are riskier investments?
See, as of now, there are no lock-in periods for any specialized investment fund. Having said that, there are a few SIFs that do not allow you daily redemptions.
Okay.
Or they only allow redemptions at specific intervals.
Okay. Okay, so we've spoken about returns, we've spoken about risks. I think the other important part is costs. So with mutual funds now, with experience, we know that on the higher side, the expense ratio will be at 1.5 to 1.8%.
Yes.
What is the nature of expense ratios that will end up with specialized investment funds?
So specialized investment funds being a new product in the market, currently the expense ratio is a little higher. And of course, they also deal with specialized products, complex products. So the expense ratio should be higher. I was going through the KID of SBI Magnum, and it mentioned very categorically that the expense ratio to SBI Magnum SIF would be 2.25%.
Okay.
Only up to a level till the time the scheme doesn't have 5,000 crores of AUM.
Okay.
Once the 5,000 crore of AUM limit hits,
Okay.
then the 2.25% expense ratio would be reduced to 1.5%.
Okay.
Now, these are interesting products, and we really need to see how these develop over a period of time, what the experiences of the investors are, and then eventually, finally, what the costs would be,
Come down to.
and what would be the average cost across the sector.
Okay, but Vivek, one good thing about specialized investment funds is that SEBI has kept taxation very similar to mutual funds. LTCG, STCG on equity-oriented strategies is same as what happens in equity mutual funds. In case of debt strategies, capital gains get taxed at slab rates of the investor. So at least that complication has not been created.
Yes.
Okay, so Vivek, let's say I've made up my mind that I have to invest in specialized investment funds. Where do I go and buy them? Do I go to my bank, or do I go to my mutual fund distributor and say that, here, put my money into specialized investment funds?
So as an investor, if you're very clear about your risks, and based on the risk, you are very clear about which SIF you need to park your money in, you can directly go to the AMC's website and buy the product.
Okay.
In case you are not clear about what kind of fund you need to invest into, you can go to a trusted mutual fund distributor and he can guide you.
Okay.
Now, the trusted mutual fund distributor needs to clear a derivative exam, which is run by NIS and SEBI, and then get himself registered with all these AMCs before he starts selling or distributing these plans.
SIF, specifically for SIF.
Specifically for SIFs.
Okay. Now, if you had to tell me, are specialized investment funds better than mutual funds?
There is no direct answer whether specialized investment funds are better than mutual funds or not. There can never be an apple-to-apple comparison.
Okay.
Specialized investment funds comes with a lot of differentiating products, complex products, wherein mutual funds are matured products. They have been there in the country for the last almost 2.5 decades. So for matured investors, the people who have been investing into mutual funds for quite some time, they understand the nuances, they understand the volatility and the risk. Now, if they want to upgrade their portfolio from simple mutual funds, they may choose to get into specialized investment funds, which may be an alternative to a PMS or a AIF, wherein the investor needs to minimum invest 50 lakhs into a PMS or ₹1 crore into an AIF. So for them, for a smaller ticket size, this can be a very interesting product to explore.
Okay, so for a mutual fund investor, probably specialized investment funds solve the problem of access to these complicated products. But let's say if I compare them to let's say an AIF or a PMS, right? Are they better than that?
So if you are the first time investor trying to invest your money into specialized investment schemes or a PMS, and if you have that corpus of 50 lakhs to invest with a PMS, the right way to do is maybe you can put in 10 lakh rupees in each specialized investment fund. Understand what kind of returns they give, what kind of risks are associated, rather than parking the whole 50 lakhs with one PMS handled by one fund manager.
Okay.
The same holds true with the AIFs also. That can be spread over 10 years.
Okay, so if I have to summarize what we've discussed on the topic of specialized investment funds, these are products which are manufactured and run by the same AMCs which are today running mutual funds. If I want my money to have exposure to complex products such as derivatives, REITs, InvITs, commodity derivatives, earlier I had no option unless I went to an AIF, but now I can start experiencing these products in my portfolio with a ticket size as small as rupees 10 lakhs. What will this do for my portfolio? I think the idea is that getting access to these complex products can potentially add an alpha to the overall portfolio, but of course they come with their own risk profile, and every investor must understand their own risk appetite before they go into these kind of complicated strategies. Where can I buy them? If I'm clear what I want to invest in, I can straight away walk into an AMC's office and tell them, here, invest my money into your SIF. I can choose the scheme. Otherwise, I can go to a mutual fund distributor as well, but only those mutual fund distributors can sell specialized investment funds who have been specifically impaneled by the AMC after clearing the common derivative exam. Thank you for watching Light Pillar Conversations. Our idea is that after watching each of the video that we make, you should be 1% more conscious about how you're investing your money. So if you like what we are making, subscribe to our channel and share it with your friends.